Okay, this is February 24th after market closed. It's about a quarter till 6 p.m. Eastern Standard Time. So this is the 4-hour chart, and I wanted to take a look at it to see where we're at on it. First of all, the ABC to the upside met the target at 38.12. So that pattern is now complete, although price can still go and test these levels here. We have not reached the inverse head and shoulders target up here at 39.53, but a lot can go on between now and then, being that this is a 4-hour chart. Throughout the night, last night, price did come down and test the FE61.8. Didn't quite make it to the neckline yet, so I'm suspecting a neckline test still at some point in time. So it's, you need to take caution when trading, because at any given moment, especially with everything going on in Libya, anything can happen. So you want to make sure you use stops. But anyways, we have not tested that neckline yet, and at some point we probably will. So our next target then on this 4-hour chart is, of course, first the 127.2 FE level and 138, and then the inverse target up here at 39.53ish. Okay, so that's the 4-hour chart. We met the target on the ABC long, and by trading this same pattern on the smaller time frames throughout the day, if you're an intraday trader, you can make quite a few pips. Or if you're a swing trader or a longer term trader, then you can trade these patterns also on a longer term basis. Now, what's next? First of all, I did want to take a look at the daily chart here. And let me put this daily chart up. All right, on the daily chart, we have closed above this trend line here. Well, we haven't closed yet. We closed last night above it, and we're still holding above it. And we are testing right now the FE38.2. Now, also on this daily chart, we have an ABC pattern to the upside. There's A, B, and C. And D is up here at 44.29. Okay. So what we want to try to do is meet these targets on the 4-hour and the daily charts by trading these same patterns on the smaller time frames. In other words, buying dips unless price closes below this daily trend line. Then we may be thinking otherwise. But until that happens, I look to buy dips in the market on this euro dollar, as long as price is going to remain above this trend line from this point on. Okay, and keeping a close eye on a possible test to the 4-hour neckline here, which could be another possible larger pullback for a decent buy at that point. But for now, I'll just trade off the smaller time frames and intraday trade. Especially with everything that's going on in the markets, we never know at any given point what can happen, which that's a normal basis thing too, but especially with all the conflicts going on in the world. Okay, so I want to check out another thing here. You can kind of see a bull flag in this area with the Eurodollar daily chart, with the flag here, the lower trend line here, and the upper trend line here. And I'm just going to expand this a little bit so we can look at it a little better. And I'm going to put the line chart on. So if I take a trend line and I draw it from here to here, I'm going to represent that with yellow. Okay, and from here to here. And then this would be the flag pole. But we have a nice bull flag there. And price has closed above the upper trend line of the flag. There's a possibility it will come down and test this flagpole. So that's why, you know, the possibilities of being able to get a larger dip down in this area, this trend line or this trend line, on these patterns is there. So we want to just, you know, be aware that these patterns are here and that where these supports are, these trend line supports are, and then we want to trade on these smaller charts to work our way to the larger time frame targets, and keeping stops in place is a real good idea at this point. Now I'm going to go back to the candle formation here, the candle chart. Alright, so we have the ABC to the upside, final target on this daily chart being 44.29. We have a close above the trend line. We have a close above the bull flag, upper trend line here. There's always the risk of price retracing back to this trend line, which comes in around 36.78, or the 4-hour inverse neckline, which comes in around the same price, 36.72, as the daily bear flag or bull flag trend line. Now, looking down at the smaller time frames, I posted earlier today about this ABC that could possibly be forming, and it did. We have A, B, C that came to the 50% retracement and then started its ascent upward. Very slow grind upward. Okay, so let's find the target on this ABC to the upside 15-minute chart. I'm going to use the Fibonacci expansion tool. A, B, C. Oops. C. So here's our A, here's our B, here's our C, and D comes in at 38.54. So let's go ahead and put D here. And if you notice, that price happens to come in right at the middle channel trend line. This is the, let me explain this a little bit. This is the channel we were trading in last night, all up in here. Today price broke below it and it formed another channel, as you can see, and I'm just going to make this a little smaller so you can see. So we were trading in this channel here. Then we broke that channel in the middle of the night and we came down, and at that point we were able to, once price moved back up, we were able to form another channel here, which is where price has been trading all day long. So we have an ABC to the upside within this channel. Okay, so now that price is, you know, moving up in a slow grind, we know that we have a target on this ABC to the upside pattern right at this trend line, the middle channel trend line that we broke out of last night, at the FE100 at 38.54. So one thing we know then is that's a very good possibility that, I mean, the best place you could have gotten in this trade that I mentioned earlier today in a video, as to this spot to buy in, is that with there being absolutely nothing going on in the market right now at this particular moment, we could have a slow grind back down, or we could go ahead and go up and hit the target. But one thing we know is below this trend line, and actually below this 200 EMA, we want to anticipate at that point one of the trend lines being tested on the 4-hour or the daily that we mentioned earlier, and a 15-minute close above this D target puts us back into this channel here that we'll be trading then. So trading's getting a little more tedious today than it was yesterday. But these are things, if you plan this out and you really take real close looks at what's going on, not only on the small time frames but the large time frames, and then go down and micro time it and trade the same way you trade on a smaller time frame as you do on a larger time frame, it makes things a little more simple. So just to recap, we have the 4-hour trend line here, which is the inverse head and shoulders neckline, has not been tested yet, so there is a threat of this being tested. The ABC to the upside target was met, but the inverse head and shoulders target has not been met yet. So we know that somewhere between here and here price is going to go. Okay, I'm looking at the daily chart. We have the bull flag. Price broke out above, has held above this upper trend line. There's the threat of it coming back and testing one of these two trend lines here. This upper bull flag trend line comes in line with the 4-hour inverse head and shoulders neckline. So that is a possibility. On the upside, a daily close above this FE38.2 will probably put us closer to this 15-minute target here at the FE100, the D target of the ABC to the upside target. A close above that will probably put us back into the upside channel, back up. But if price decides to meander down and close below this 200 EMA, then the likelihood of the 4-hour and the daily trend lines and necklines are probably going to come into focus at that point. So this was a little bit more in-depth analysis, a little bit harder to analyze today and to trade today, but definitely doable. Keep in mind that one thing I did want to mention, that although we can have these great patterns and candle patterns and price action patterns and all those things that us as traders, the tools that we use, although we can have perfect setups, it's so important to use stops because those setups are not 100% guaranteed. The market does have to consider the fundamentals and the world economies and the conflicts in the world when it comes to the market. So at any given point, your perfect setups can A, targets may not be reached, B, completely turn and reverse. I've been in this market long enough to see such reverses happen, and with such a quickness that you don't have time to get out. So that's just something that I always reiterate all the time, especially for new traders, that's the most important thing they can do for themselves is to use stops. Okay, this is February 24th, 2011 p.m. analysis.